Right, hi everybody, this is John here, and I just want to talk to you a little bit about trading systems. First off, we have trades which will do something like that. That is a trend. You can tell it's a trend because you've got a low followed by a low which is higher, and a higher high, and a higher high, and a higher low. Alright, so that's a higher low, a higher low, a higher low. This is a higher high, and a higher high. And so for trend trading, what you're aiming to do is one of two things. One is to find a point at which it breaks above this level, and you trade the breakout like that. So you trade the breakout. And the other possible thing that you're trying to do is, having established that this low has occurred, you're now waiting for the next one. You're waiting for the pullback, and you're looking for a number of bearish candles coming down here, and an indication of some kind that we're going long at this level. Okay, so that would be a long trade going up on the breakout, another potential breakout here, of course, or trying to catch this initial push with the stop underneath the low. So that would be the stop price, and your target will be wherever your target is. So again, on this case, your breakout there, your stop is officially there, though you might get clever, and I can talk to you about being clever about that. Okay, so that is essentially catching the trend trade, but often trends aren't so obvious. One of the reasons why a trend isn't so obvious is that while it's doing this on a lower time frame, it may be doing something like this on a higher time frame. And what you're looking at there is this part of a downtrend, not realizing that when you're trying to trade it, which means it's highly probable it will not follow through, that it will get to a point here and then start coming back against you. So how do you deal with that? Well, essentially you deal with that by utilizing multiple time frames. And what you need to do is understand the trend on each one of those. So let's just come to that now. Just pause the video for a second. So let's say that we determine this to be a trend, and we determine it to be a trend by some kind of way, some algorithm. Now, a typical way is to use moving averages. Things like the 10-period moving average, and the 20-period moving average, and the 50, and the 100, and the 200. So you'll end up with lines on this chart that look something like, let's take this different color, it looks something like a line like that, and then perhaps another line that will look something like that. And there are various things. Now you may find, and perhaps another line, another one down here, something like that. You're often looking for the alignment of those, but as I said, you can't tell whether that is an uptrend within this downtrend. Okay, so that's our challenge. Now, I've written some software that basically allocates a number to this. It takes all of these different moving averages, it gives a weighted value to those moving averages. So you get a weighted average sort of for smaller time frames and larger ones, and there's an algorithm that basically it codes something like 6 to 7 different variants on moving averages and price action, runs it through this algo in real time and comes out with a number. Now that number is what I call the bull-bear butterfly number. And the bull-bear butterfly number is a number that ranges between plus 14.75 and minus 14.75. Now you'll find that, just flick the pen here, So 0 is neither one thing or another. It's not committed in one direction or another direction, right? So when it's 0, I'm saying it's butterfly, because you get bears, which is going down, shorting. You get bulls, which is going up, going long, and butterflies, which are kind of not one thing or another. When you aggregate all of these together and come through with an algorithm to come up with, well, what are we really doing here? Then you come out in the middle zone of some sort. And the middle zone is somewhere between, shall we say, +7 and -7 or something like that. The middle zone says whatever's going on in the market at the moment, it's indeterminate. We don't know. So there we have it. That would be a way of calculating what are we going to do about this. And if you can calculate that on many different time periods, you can see what's really happening. So to make sure that, for example, this one might have been showing us a number, see if this pen works better. This one might have been showing us a number of -8 because it's coming down. And this one might have been showing, at this point, might have been showing us a number of +9, saying we're going up. So basically, and if you just looked at the chart, you'd say it's going up. But if you didn't take into account that, you wouldn't know that it's actually going down. So this multi-time frame display is something I've created to help you understand that. Now let's just change to the screen and we'll have a proper look at that. And here we are with an example of this multi-time frame display. I say example because it's live, it's real, it's what's happening on the FTSE 100 right at this minute. We're sitting here on the 15-minute, M15 on the 15-minute chart. And if you look at this display, you will see it says the number 1 here, which is the spread in pips. And then it says MN1, that's monthly, W1 weekly, D1 daily, H4 4-hourly, H1 1-hourly, M30 30-minute, M15 15-minute, M5 5-minute, and M1 1-minute. And the bull bear butterfly I was just talking about is listed along this row, which says that from the weekly point of view we've got 11.25. Sorry, from the monthly point of view, we've got 11.25. From the weekly point of view, we've got 11.75. Daily, 6. H4, 10.5. H1, 7.5. So all of the higher time frames are long. Then we've got the 30-minute, which is a bear. Okay, so this is now going down within the higher time frame. So that would be a pullback. And the 15-minute is bear, and the 5-minute is bear, and the 1-minute is bull. And then I have another indicator which is called the BBBR. It's a refined version of the bull bear butterfly. It's not based on moving averages, it's based on basically the candles and the candle strength. And again, it's an algorithm which combines a number of different ways of measuring that into an aggregated value. Now, if they're both in agreement, this aggregated value and this aggregated value, it gives you a lot of confidence that that is the truth of the matter. And it will enable you to make a decision which way to trade. So clearly, from the 15-minute, we are in butterfly from the BBBR, and we are bear from the bull bear butterfly. So we've got a bit of conflict going here on the 15-minute. On the 1 minute, it's saying we're bull on the BBBR and we're undecided on the bull bear butterfly. So at the moment, there aren't actually any trades to take because there isn't any agreement across these. It has a further thing, which is the ATR, which tells you the average true range on each of these different time frames. So why is that important? The average true range tells you the average distance a move might make in any one of these individual time periods. In this case, it's the average true range of the last 10 periods. What it means is that when you're in a trade, it's less likely to move more than that number of pips on average, which means that if it's already moved something like 8 pips, for example, on the 5-minute, or 8 pips on the 15-minute, chances are it's done all the movement it's going to do in that 15-minute period. Now, since it's an average, of course, that's not strictly true. Since it's an average, it could be more than that and less than that. It just gives you a feel for it. But that is a really good indication if you find, in this case, for example, this candle we're looking at here, I'm pointing, that did a move from the bottom to the top of, it says 13 pips. And the average true range on that was 7. Okay, but some candles, let's take this one here, that one moved only 4 pips. So you get the idea. It could be 4 pips or it could be 13 pips, but the average is 7, going, well, 7.8, which means 8. So that's all there is to say about this particular part of it. Now, we talked about different levels at which you know when you've got higher highs and higher lows. So let's just talk about that a little bit. I get the crosshairs out again. You can see on these lines, I call them the Darvas lines, after a guy called Darvas. I've forgotten his first name at the minute. He talked about the idea that things would consolidate in particular zones with specific highs and lows, and then they would break out of it, and they would then have a tendency to break again. And he made a lot of money out of trading the breaks out of the consolidation zone up to the next level and then keeping that going. And he had a whole strategy about that, which I could talk to you about on another day. However, this then identifies the highs and the lows. And when you see something happening in correct order, as it were, so here we've got a high, then we've got a high, then we've got a high. Here we've got a low, but it's not convincing. The range is big and wide. Then we've got a slightly lower low down here. And then we've got this penetration of this low and a rejection of that penetration. So we haven't really set up the trend because this high here is higher than this high. So again, we don't have a proper clean structure. So while you don't have a clean structure, it's often well to stay out of the trade and just leave it alone. And there you have it, really. Fibonacci's on here. I've got a Fibonacci line on here. I could talk to you again about all of that another day, I think, because that is another way of interpreting how things would work. But they fit in quite well with my indicators and my trading system. There are a whole load of indicators down here, which I haven't got time to talk to you about in this first instance. But these top two here are the bull bear butterfly lines. And when it's below this red line, it's essentially saying we're looking for overall bearish trades in this time frame. And if I bring the crosshairs over here, if you look in the left-hand window, you'll see the data window. This is the data window. That's the bull bear butterfly, that's the BBBR. If I bring this over the top, the cursor over the top, you can see that the bull bear butterfly is currently reading around 14, and the BBBR is currently reading around -1.4. And you can see that on the multi-timeframe display. So this is telling you what's going on all of the other time frames. Anyway, there you go. I hope that was useful to you. I hope you'll find it a useful piece of software to be utilizing. And if you do, then obviously just make sure you get it. Okay, this is John here, wishing you very, very happy trading, and stay safe, trade well, trade perfectly, trade with the probabilities.